Well, business confidence among retailers rose 14 points in the third quarter of the year, reversing almost all of the second quarter's losses. The business confidence index, compiled by the Bureau for Economic Research, rose to 52 points from 38 points previously. Joining me with more is Craig Lemboe. He's the economist at the BER. Craig, thanks very much for coming in today. The recovery in the retail sector on track at this stage, do you think?
Yes. According to our survey, we can see that there is indeed a recovery in the retail sector taking place, but also that there are still pockets of weakness that exist within some of the underlying indices.
So where are those pockets of weakness as you see them at the moment, Craig?
Well, if you look at some of our survey results, you can see that there are still price pressures on many retailers. Our respondents indicated that the growth in their average selling prices was lower than the same quarter last year, as well as an expectation that for the third quarter, sales might not have grown as robustly as in the second quarter.
Craig, who are the respondents in this survey? Are we talking about supermarkets, wholesalers, just general shops?
Well, we have essentially three types of surveys that get taken into account for the retail survey. The retail survey itself looks only at retailers, and it is a representative sample. So it would be your small businesses, it would be your bigger businesses. And then we've got the wholesale confidence index, which we also publish, which looks at the wholesale side, and then the vehicle traders, which is a separate index. But for the retail index specifically, only retailers and a representative sample of the broader universe.
Of course, we know that the volume of retail sales rose 4.9% year on year, and that's according to numbers out from Stats SA. Is that also the number, though? The message that you're getting from the respondents in your survey?
Well, from the survey, our responses are a bit less optimistic about growth in volume of sales for the third quarter. But it's important to note that our survey looks mainly at trends, and you can't really equate a 1% decline in the survey results to a 1% decline in volume of sales. So volume of sales should continue in the third quarter, but not at as pronounced pace as it did in the second.
Because just perhaps looking at the food retailers, and we have seen consumer prices showing that really there is very little food pressure at the moment. Is that a message you're getting, that their margins are under pressure due to low inflation at this stage?
Yes, that does seem to be what our respondents are indicating. They are indicating that their selling prices are not growing as robustly as it did in the same quarter last year, and that purchasing prices have started increasing. So you're sitting with a widening gap between purchasing prices and selling price increases.
Now, what's quite interesting, I see that the semi-durable goods sector, and that's clothing, footwear and textiles, did reasonably well. Non-durables, food and groceries, didn't do so well, and durables also. Does this give an indication, if people aren't buying durable goods, that they're still very negative about the economic prospects going forward?
Not necessarily, Stephen. If you look at some of the underlying subsectors, you will find that the building materials component of your durable goods has performed the worst of all. And that has got a lot to do with developments in the construction sector. On the other hand, furniture, household appliances are still doing exceptionally well, as revealed by our survey and as revealed by some of Stats SA's data. So it's not durable goods in its entirety, but there are subsectors that are performing well and some subsectors that are performing less than well, Stephen.
Now, of course, we know that the retail prices given out by Stats SA were really inflated by the World Cup, particularly for some durable goods like electronic goods, TVs, etc. This survey, of course, was done in August, so I presume that the World Cup was out of the system, but it was also done before the latest interest rate cut. Do you think you'd get a different answer if you did that survey today?
It's difficult to say, Stephen. What we try and gauge is just a quick estimate of what the sentiment is at the time, and we don't look at the factors, or we don't ask what the factors were that were influencing the various retailers at the time. If we were to look for an impact of the interest rate cut, we'd have to look at what the fourth quarter results say.
Craig, business confidence among new vehicle traders up by 30 points to 79, 79 index points, so really probably driving some of the sentiments in the sector at this stage. Do you think that that's sustainable going forward, though, that we can continue to have such high confidence among the vehicle retailers?
Well, the high confidence amongst new vehicle traders comes as a result of them exceeding the expectations for the third quarter. We usually include a forecast component in our surveys, and in the second quarter they expected a bit of a dip in sales, which didn't materialize in the third quarter, and that to a large extent drove business confidence in the new vehicle trader sector up. However, they have tempered the expectations for the fourth quarter. So we'll have to wait and see how that business confidence turns out.
Well, just looking overall for the fourth quarter, because we mentioned that interest rate cuts, do you think that's going to give them a little bit more confidence in the fourth quarter of this year?
Well, it should improve business conditions, but the index looks at a range of factors, so it could be counterplayed by some of the other factors affecting the economy as well.